Yeah, so I'm tempted to believe you guys have gone through the syllabus. Is that right? Have you been able to go through?
Yeah, yeah.
Okay. So PSA and public sector accounting and finance. In fact, in this course, we are going to do a little bit more of reading. In fact, it's not difficult in the exams. Every year, between 60 to 75% of the questions are mostly theory. Then you are tested on a few practical calculation. So we will look as much as we can, the theory as well as the calculation aspect. On my screen, you can see a summarized coverage of the syllabus and then the weighting or the percentage that examiners always test in the exams. You can find the detail of this in the PDF I shared it to you last night. Now, we are going to start right away with the section B of the syllabus, which is the regulatory and a conceptual framework for public sector accounting in Ghana, which weighs 10% in the exams. What it means that in the exams, you may have about 10 marks coming from this section in the exams. Yes. Now, in this lecture, I'll be sharing with you lecture notes after every lecture. I'll also try for us to solve um, more past questions after every lecture. In fact, I'll try and bring beneath the lecture notes some of the past questions they've asked on the topic that we've treated and then provide you with answers. I advise you also get some other course materials, then you compare with them, you get yourself some past questions or question banks, then you read. I know all of you are workers, you are all working. Yes, you are all working, and sometimes you need to make some little time. In fact, it's not a difficult course. PSA is like any of the reading subjects, and you should be fine. It's a little more calculation. All right. And then this course to if you are doing FR, it will be of help to you. Most of the concepts in FR, you can bring them here because of the IFRS, IAS, and then the IPSAS relationships. Because most of the, when I say IPSAS, I mean International Public Sector Accounting Standards. Most of these standards are derived from, sorry, IFRS and then IAS. So if you know IAS 15 for non-current assets, the same principle equally applies when you are doing IPSAS. All right. So let's start today's business. Conceptual framework for public sector accounting in Ghana. This is a topic which is also in FR. And then please, like I did mention it, read. When I send you this thing, read. You see the things we do, you enter into the exams hall, and they are there. Okay. At this point, any question for me? Hello.
Hi. So I don't think we have any.
You do not have any question. All right. So let's look at the conceptual framework for public sector accounting in Ghana. You could see that in my lecture notes, I have bolding or highlighted certain, let me say, phrases, words, or however you say it. So when we say conceptual uh, framework, We are only looking, sorry, we are only looking at, some um, ideas or concepts that the big men, or those who prepare international public sector accounting, what are the concepts that they apply in developing IPSAS. In fact, I'll be mentioning IPSAS more. IPSAS means International Public Sector Accounting Standards. Now, when you go to any discipline, any field of study, they have standard procedure or way of doing things. In the same way, if you're an accountant in the public sector and you are reporting financial information for users, there are certain standards or procedures you need to follow. And these standards are developed by a board called the International Public Sector Accounting Standards Board. So they develop standards. So what do we mean by conceptual framework? We are saying that this framework just establishes a concept that are being applied in developing the IPSAS. So you can ask me, so for example, let's assume you're a doctor. How do you perform operation? Is there a standard way of performing operation which people issue these standards that, oh, before you do operation, you have to do X, Y, Z. It's the same thing. So these are just concepts that are applied in developing the IPSAS. And then recommended practice guidelines. In fact, pay attention to recommended practice guidelines. We will come deeper into it. So as an accountant, when in the public sector, when you are preparing financial statements, what are some of the standards you need to follow? So there is a board somewhere, sitting somewhere in Europe or I think the US, and they come up with these standards to follow globally. Now, bear in mind that this IPSAS, the more reason why we have this IPSAS is that for the purpose of harmonization, so that if you're an accountant in the public sector in Ghana, when you go to UK and a UK accountant in the public sector has prepared a financial statement, you'll be able to understand and make meaning, so that a Ghanaian public sector financial statement can be easily compared to a public sector accounting report in the UK, in the Japan, Australia. It's just for globalization and then what? Harmonization. That's all these standards is about. Other than that, Ghana could be doing something different. South Africa could be doing something different because of globalization and harmonization and then standardization, uniformity. That's why all these standards exist. Okay. Now, I mentioned the role, I mentioned International Public Sector Accounting Standards Board. These people, what do they do? What did they do? So they develop the standards. Yes, they come out that, oh, if you want to treat an item of property, plant, and equipment, or revenue, or exchange transactions, and foreign currency, these are the procedures, these are the things for you to do. So the IPSAS B, or the International Public Sector Accounting Standard Board, their main work is to what? Develop the standards. Now, these are designed to improve the quality of general purpose financial reporting by public sector entities. We will come and look at this thing. General purpose financial reporting. General purpose financial reporting. I think in one of the past questions, they asked what are recommended practice guidelines. You can see it here. Recommended practice guidelines. Okay. So IPSAS, or International Public Sector Accounting Standard Board, they develop standards for all countries that want to use IPSAS in the public sector in their reporting. So this is what they do, development of standard. In fact, you could be asked as part of a theory question for 5 marks in the exams. Okay, then they also promote the adoption of the standard. So, for example, after they develop the standard, they encourage countries that use IPSAS to adopt them. Let me explain. Sometimes a standard may come, then they will tell you that this standard is applicable in, let's say, in 3 years' time, but early adoption is encouraged. So it means that the standard has come, though the standard takes effect in 3 years' time. If public sector entities would like to adopt the standard earlier than the effective date, it is permitted or allowed. Yes, so this is one of the things they do. Promotion of adoption of the standard. Now, they also enhance accountability and transparency. You see, the main purpose of financial reporting in the first place is what? Accountability and transparency. More especially in the public sector, whereby public officials are being paid from taxpayers' money. Yes, so the International Public Sector Accounting Standard Boards try to enhance accountability and transparency in the public sector. You can see from the way even financial statements are prepared in the areas of disclosure, measurement, recognition, and derecognition, transparency. So it means that public sector entities can produce financial reports that are more transparent and what? Accountable. If you look at the elements of a financial statement, I mean the assets, liabilities, revenue, expenses, their disclosure requirements, measurement, and everything always borders on transparency and accountability, fairness, truthfulness. Okay. Then the IPSAS board also supports and give guidance. Yeah, sometimes people may find it difficult applying the standards in treatment of the elements of the financial statement. They support and guide countries or public sector entities in the implementation of any IPSAS that they come. In fact, as we go along, we'll come and look at IPSAS proper in detail. So if you look at here, look at this place, section C, application application of IPSAS to financial transactions by the public sector. We will come and look at a lot of IPSAS. When we say IPSAS 12, IPSAS 1, IPSAS 10, IPSAS this, what is it? What are the disclosure requirements? What are the measurement requirements? What are the recognition and derecognition? We come and look at all, and examiners like testing students' knowledge of the IPSAS, because if you are doing PSA, you should be on top of all the IPSAS. So, for example, they can ask you about the objective of a particular IPSAS, the measurement criteria. So we come and look at it as we go along. Then they also collaborate with other organizations. Yes, you see, when you are doing a standard, you are an accountant, but you realize that there are certain field that you may not be an expert. So, for example, you're an accountant, but when it comes to inventory of, let's say, high or specialized areas like petroleum, you may not have the idea. So these people, when they are developing the standard, they collaborate with other institutions or organizations in developing the standards. All right. Then, as usual, research and then consultation. Now, one could ask, so what's the difference between a public sector entity and then a private entity? A private entity like MTN, Unilever, I mean, any company, FAMUC, yes, they exist. But why are people so concerned about public sector entities? I mean, the government, and the government is the government. So why do, let's say, GES exist? Ghana Police Service, Ministry of Trade and Industry, Ghana Armed Forces, why do they exist? So we are going to look at the primary objective of public sector entities. These people, they exist not to make profits, but rather they exist to deliver services to the public, rather than to what? Make profit and generate return on equity to investors. Yes. How many people can afford taking their children to Ghana International School or American International School? It's only a few rich people. But the government comes in to go and establish a school in a remote area or a hospital in a remote area so that people can have access to quality health care and then um, education. Because of that, because they don't exist to make profit, but just to deliver services at affordable prices to people. Sometimes, if you want to evaluate their performance, it is very difficult. And so such entities can only partially be evaluated by examination of their what? Financial performance, position, and then cash flow. Sorry. So, for example, how do you assess that Ghana Education Service is doing a good job? Ghana Police Service. How do you assess? Sometimes very difficult, but if you take a company like MTN and you want to assess them, you can just take their balance sheet, their P&L, and easily assess them. All right. Now look at this one. General Purpose Financial Reports. If you see this, JPFRs, it means General Purpose Financial Reports. Provide information to users for accountability and what? Decision-making purposes. Yes. So ECG, Tema Oil Refinery, Ghana Port and Harbors Authority, and then any public sector institution. How are we able to assess their performance? How is government able to allocate funds from them, from the consolidated fund, being it a ministry, department or agency, a metropolitan, municipal or a district assembly? I mean, how are we able to assess their performance? So it is only when we prepare general purpose financial reports that we'll be able to provide information to users. We'll come and look at users of financial statements. Okay, so users of financial general purpose financial reports of public sector entity need information about these entities I have mentioned: Ghana Education Service, Ghana Health Service. We need an information to assess them on issues such as whether or not the entity provide its services to constituents in an efficient and effective manner. So, for example, when you take Ghana Police Service, when you report a case to them, how early are they able to respond to armed robbery cases that are being reported to them? You go to the police station and they tell you they don't have fuel. When you take Ghana Health Service, how responsive are they to emergency health situations? So for you to know all these things, we have to prepare what? General purpose financial reports. And this report provides users of public sector entities information to assess the resource currently available for future expenditures. Yes, when we say resource available, we mean the taxes. Taxes. And to what extent there are restrictions or conditions attached to their use. Yes, here we are talking about what? Budget. Every revenue given to you has a corresponding expenditure under which you cannot spend more than. Okay, and then users of general purpose financial report of public sector entities also need information to support assessment of such matters as to what extent the burden on future taxpayers of paying for current services has changed. Now, more often than not, you hear that ECG should be privatized. Ghana Airport should be privatized. Sometimes we look at the going concern and burden on future year taxpayers. We look at going concern that our taxpayers have been using their money to fund ECG, Ghana Port, but it doesn't look good for the future. Then whether the entity's ability to provide services has improved or deteriorated compared with previous years. How often does ECG, though we pay prepaid every now and then, small time they slice out, right? We pay water bills, but our tap don't flow. So if only they provide information, financial information, we can assess their performance and know whether to keep them or not. Let's look at general purpose financial reports, which I have mentioned. Now, when we say general purpose financial reports, they are reports intended to meet the information needs of users who are unable to require the preparation of financial report tailored to meet their specific information needs. Yes, please look at this place very well. It said they are financial reports intended to meet the information needs of users. When we say users, you can be a user, you as a citizen. Parliament can be a user of financial statements. IMF, World Bank, donor countries, okay, users who are unable to require the preparation of financial report tailored to meet their specific information needs. So, for example, if IMF needs information about Ghana, how public sector entities are faring, the only thing they can do is that they can't go to, let's say, Ghana Education Service and ask the accountant to prepare a financial report to them. But through the sector minister and through the finance minister, who require the preparation of this financial statement and makes them available to external users, these informations will be available for users who are unable to require the preparation of financial report tailored to meet their specific information needs. So you are a country, you want to go for a loan from the World Bank or from wherever, then people can easily access your information through your website and know how your state institutions are faring. Now, some users of financial information may have authority to require the preparation of report, yes, tailored to meet their specific information needs. So Parliament can ask Public Accounts Committee of Parliament or any state institution with oversight responsibility like Bank of Ghana, Securities and Exchange Commission, National Pensions and Regulatory Authority. All those people are institutions who may have the authority to require the preparation of what report tailored to meet their information needs. Okay, so that is that for general purpose financial statements. The rest are all self-explanatory readings that when you do, in fact, you understand. So I'm going to skip them to the role and authority of the conceptual framework. The role and authority of the conceptual framework. When I mention conceptual framework, please always remember that I said they are concepts that are usually developed in they are concepts that underpin the development of IPSAS. They are concepts that underpin the development of what IPSAS for the preparation of general purpose financial statements. Okay. Now, so the conceptual framework identify the concepts that the IPSAS board will apply in developing IPSAS and recommended practice guidelines. Yes, it is very simple. The conceptual framework identify the concepts that the IPSAS board will apply in developing IPSAS and recommended practice guidelines intended to assist preparers and others in dealing with financial reporting issues. So, like I mentioned, conceptual framework is basically those concepts that guide the IPSAS board for them to develop what? IPSAS. The IPSAS are standards, procedures that accountants in the public sector follow when they are preparing financial statements. Let me explain it. I mean, simply as it is. Okay. So IPSAS and recommended practice guidelines are developed after application of a due process, which provides opportunity for interested parties to provide input on specific requirements proposed. Now, before IPSAS are developed, or in fact, they follow what we call a due process. The people there sitting, I mean, the head office in Europe or in the US, they don't sit there and do things on their own. In fact, they involve all countries, including even Ghana. So you, as a future ICA student, someday when you qualify, you can even be on the IPSAS board and participate in this what we call due process. Due process, whereby so these people they will represent the country Ghana for us to make our input that they are going to develop a new standard. And what is your input? Ghana. So Ghana is usually or always represented by the Institute of Chartered Accountants, which is a member of IFAC. IFAC means International Federation of Accountants. So they go through what we call a due process before a new standard is what developed. Okay. So look at something I mentioned. The conceptual framework underpins the development of what? IPSAS. Yes. Conceptual framework underpins the development of what? IPSAS. Okay. Now we've looked at general purpose financial report, isn't it? Let's look at special purpose financial report. Please bear in mind that in the exams, they can ask you to differentiate between general purpose financial reports and special purpose financial reports. Bear in mind. Okay. Please, any question up to this point? Hello, are you there?
Yes, sir. Yes, sir.
Please, any question?
No. No.
Do you understand everything I have said so far?
Yes, sir.
Yes, do draw my attention if you don't understand it. In fact, like I mentioned earlier, PSA is between 60 to 75% theory. So the lecture in the beginning might start a little bit boring, but when we begin with the practical aspects, you will all enjoy that one. You'll be doing the talking because I'll be asking you to calculate this for me and give me the figure. In fact, I'm not going to be, let's say, I've given the question to you ahead of time, then I will come to solve, okay, what is the revenue figure? Mention it for me. Okay, we have our revenue. The expenditure, we have compensation. Which items make compensation? Please look through your questions and tell me the figures that make up compensation. Then you tell me. Then I'll keep writing. So you'll be mentioning it to me. Then I'll ask, okay, what is the total for compensation? Sorry, compensation. Okay, let's go to goods and services. What items make goods and services? Then you'll be mentioning to me, what is the total figure? Okay, subtract the expenditure from the revenue. What do you get? So, pardon me that, I mean, all this place, they are nothing like calculations here. I think the calculation will come at this place. The calculation will, preparation of financial statements for public sector entities, and then evaluation of financial position, performance, and prospects of public sector entities. And then I think a few somewhere, yes, here to application of IPSAS to financial transactions. Yeah, but if you look at regulatory and conceptual framework, I mean, they are all theory. Overview of PM cycle, these are all theory. Governance in the public sector, these are all theory. So let's move a little bit faster. Um, all right. So special purpose financial reports. Now, when we say standard setters, these are the people who set the standards. Okay, I mean the IPSAS board. So standard setters often described as special purpose financial reports. Those financial reports prepared to respond to the requirement of users that have the authority to require the preparation of financial reports that disclose the information that need for their particular purpose. Please, I'm going to ask you a question. You have to answer me for the class to be engaging. In my previous or earlier delivery, I mentioned something that some people cannot go to, let's say, Ministry of Trade and Industry and ask them to prepare financial reports, but they will depend on things that are published by, let's say, the state government for them to make decisions. And I also mentioned that others can directly ask for financial reports directly. So who can tell me the difference between general purpose financial reports and then special purpose financial reports from what I have read so far? Look at this, please. Those financial reports prepared to respond to the requirement of users that have the authority to require the preparation of financial reports. Now let's go back and come to this place. Look, general purpose financial report intended to meet the information needs of users who are unable to require the preparation of what? Financial report. Then let's come back to special purpose financial report. So please, now I throw the question to you. Who can tell me the difference between general purpose financial reports and special purpose financial reports? Yes, I'm listening. In your own words. In fact, nobody is wrong in this discussion. So who can tell me the difference between general purpose financial reports and special purpose financial reports? Yes. Who is helping us?
Okay, so I want to try.
Please try.
Okay, so in all the two financial reports are looking at um individuals needing information for like specific purposes.
Okay.
But what stands out is that
Mhm.
the general one has to do with people who are unable to.
Okay. Okay. Yes. Yes. You are right. Continue.
Yeah, the general has to do with people who are unable to request or require for it. But the special one, it has to do with people who have the authority to require for it.
Thank you.
That's what
Thank
I
you.
think.
Yes, you are right. Let's continue. Um, so let's look at objective of financial reporting. I mentioned this earlier. Public sector, public sector. Why is it that? Why must they prepare financial reports? Even we as individuals in our homes, sometimes we prepare budget, isn't it? In our small businesses, we want to know whether we've made profit or loss, how we are performing, and all that. So we are going to look at objectives of financial reporting, more specifically to the public sector like Ghana Education Service, Ministry of Trade and Industry, Ministry of Health, name it. Okay, so the main objectives of financial reporting are to provide information about the entity that are useful to users of general purpose financial report for accountability purposes. This is very, very important for accountability purposes and decision making. Now, in the public sector, even if you don't know anything, always know accountability. And the people, our MPs, people in the offices, Senate office, GRA office, these are all people that are being paid from our taxes. And so they are accountable to the citizen because they are living on the taxpayers' money. So they are accountable and we need to hold them accountable in order to make decisions for their actions in the various offices. So these are the main objective of what? and financial reporting. Okay. Now, financial reporting is also to provide for information useful to users of what? General purpose financial report. Yes. Now, if you are Ghana and you need a loan from the German government, you think they'll just take the loan to you just like that without asking for any information about your country and the institutions in your country? No, no, they will always ask. So we can take a for accountability purposes, for decision making, to provide users of information useful to users of what general purpose. This. All right. Now, which people use financial reports? So we are going to look at users of general purpose financial report. In fact, these things are per school. I remember those days, 2015, 2014, thereabouts. So in fact, we will look at how they can ask you these questions in different forms. In fact, this question, they may not ask you directly that mention 5 uses of general purpose financial reports. They'll put it in a case scenario that you are the head of procurement department in Ministry of Trade. A group of interns or national service people have come to do the national service under you, and they are blah, 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 blah. All what they are trying to say is that who are the users of general purpose financial reports. So what we mean that which people use the financial reports that are provided in the public sector, government and other public sector what? Entities. Yes. In fact, the cabinet, parliament. I don't know whether you've heard something we call Public Account Committee of Parliament. Yes. In fact, these people hold officers of public sector entities accountable for any irregularities that are being reported by the Auditor General in their recommendations or in their audit of all public accounts. So government and other public sector entities, these people raise resources from who? Taxpayers, donors, lenders, and other resource providers for use. So those that provide the resources and receive or expect to receive the service also require information as input for what? Decision-making purposes. So we may say that, you people in, let's say, controller and accountant general, you people in Ghana Ambulance Service, we are paying you from taxpayers' money. But every time when people call you to come and deliver in emergency situation, you are not able. Your maintenance cost is so high. You are always buying fuel, doing repairs, but we don't see what you are doing. Yes. Therefore, we are not ready to go on with you anymore. We will privatize you so that people will come and buy it and you'll be paying you from their own. There, if you misbehave, they will sack you. Okay. Now, information needs of service recipient and resource providers. Here, the legislature or similar body and members of parliament or a similar representative body are also users of what? General purpose financial reports. So we are looking at government and other public sector entities. And also we are also looking at what? To the fact that general purpose financial reports of public sector entities are developed primarily to respond to information needs of service recipients and resource providers. Who can give me an example of service recipients and resource providers? Service recipients and resource providers. Who can give me an example of one? Service recipients and resource providers. Who are the resource providers? So, see, resource providers who do not possess the authority to require a public sector entity to disclose information they need for accountability and decision-making purpose. Yes. you and I like this. We can't walk to Ministry of Defense or Ghana Police and ask them that they should provide information to us, isn't it? But Parliament can ask them to. Then based on that, we also know what is going, and we can make. So resource providers, you and I, we are resource providers because we pay taxes. Is that all right? So this are how we mean service recipients and who resource providers. Okay. Now, which people also use general purpose financial report? We are talking about what citizens are the primary users of what general purpose financial reports. So some service recipients and some resource providers that rely on general purpose financial reports for information they need for accountability and decision-making purpose may not be citizens. For example, residents who pay taxes and or receive benefits but are not citizens, multilateral or bilateral donor agencies, like I mentioned, International Monetary Fund, the German government, Danida, I mean, all those foreign donors, all these people need general purpose financial report for decision making purposes. So government statistician, I don't know whether you've heard of Ghana Statistical Service. Analysis, the media, yes, Joy FM, City FM, financial advisors, public interest and lobby groups, and others may find information provided by GPFRS useful for their own purposes. Please, in the exams, they can ask you mention and explain 5 uses of general purpose financial reports. And when it comes, it's as easy as it is. So service recipient and resource providers will also require information as input for making decision. So for example, lenders, creditors, donors, and others that provide resources on a voluntary basis, including exchange transactions, make decisions about whether to provide resources to support the current and future activities of government. We are looking at inefficiencies in ECG, inefficiencies in, let's say, Ghana Water. Should government continue to sponsor them? Don't forget, most of these institutions, their salaries are paid by what? Government. But if they are privatized, it means a private entity will own them, and these people, workers there, will be assessed on performance before they will be what? Paid their salary. Okay. Taxpayers do not usually provide funds to the government or other public sector entity on voluntary basis or as a result of an exchange transaction. I'll explain this. When you pay tax, you don't pay the tax to directly, just like you bought something from the shop. You see, when you buy something from the shop, directly you are exchanging something with the shop owner or the seller, isn't it? When you buy a milk, you give money out, they give you the milk. But in paying taxes, the benefit is not always direct. It is indirect. So that's the meaning of what? Exchange transaction. Exchange transaction is where the benefit is direct. You give out money, they give you the good. That is an exchange or direct. So we are saying that taxpayers do not usually provide funds to the government or other public sector entities on a voluntary basis or as a result of what? An exchange transaction. In addition, in many cases, they do not have the discretion to choose whether or not to accept the services provided by a public sector entity. Yes, in fact, every pen that you buy, any item that you buy, indirectly, you have paid tax to the government. And so the government, in addition to giving you back the tax you have paid, normally it's not always instant. In fact, you may not even feel it that you have enjoyed from the taxes that you paid. Okay. So information provided in general purpose financial report for accountability purpose will contribute to and inform decision-making purposes. So it means that all the information that are provided in general purpose are for what? Accountability and decision-making purposes only. So for example, your MP at the end of the period, wherever you are, whether you are in Ladadekotopon, whether you are in Kole Klote, all these municipals or district assemblies, they also prepare financial reports. Don't forget. They prepare financial reports. All MDs, all MMDs, ministries, departments, and agencies, metropolitan, municipal, and district assemblies. All these people prepare financial reports. Okay, for example, information about cost, efficiency, and effectiveness of power service delivery, the amount of resource cost of delivery, and the resources available to support future activities will be necessary for the start of what? Accountability. This information will be useful for decision making by users of general purpose financial reports, including decisions that donors and other financial supporters make about providing resources to the entities. So here we are only looking at upon all, should we continue giving you funds or donation for you to operate? No or yes, you didn't operate very well. So we are not going to extend resource to you. Decision making. Okay. Now, you'll be hearing me saying general purpose financial reports or financial information or financial statements. We are going to look at, when we say a financial report or a financial statement, what are some of the characteristics of a financial report? Or when we take a financial statement or a financial report, what quality must the financial statement or report exhibit? For example, you can't sit somewhere and prepare any financial report and go and give it to somebody for the person to depend on in order for the person to give you a loan. No. In fact, the account must have been prepared anyhow. I mean, subjective. So many things. We don't like that. So we entreat accountants that when they prepare financial reports, it must exhibit certain qualities. We are going to look at them. Now, qualitative characteristics of financial reporting in the public sector. So here, we are trying to say that general purpose financial report presents financial and non-financial information about economic and other phenomena. Please, if I say financial and non-financial information, the financial information has to do with those information that has monetary value. The non-financial information are the other qualitative characteristics. So the financial information will be the quantitative, then the non-financial information will be the what? The qualitative or other descriptive information about the financial statements. Is that all right? Okay. So general purpose financial information present financial and non-financial information about economic and other phenomena. Yes, when we say economic and other phenomena, we are looking at, when we say economic phenomena, I mean things that are of national interest in monetary value. Okay, so qualitative characteristics are the attributes that make information useful. Please listen very well. When we say qualitative characteristics, they are the attributes that make information useful to users and support the achievement of the objectives of what? Financial reporting. So when you prepare a financial report and you give it to a user, IMF, a donor, a taxpayer, parliament, the government, and after that, they tell you that the information you give to them was not useful, it was useless, and so they can't make any decision out of the information you give to them, then it means that report is not what? Qualitative. It means the report you have prepared lack certain qualities or characteristics. And we don't want that to happen. So we are saying qualitative characteristics are the attributes that make information what useful to users. Let me give you an example. You go to Mokola market, then the Mokola woman, you ask her that, oh, today, how much sales has she made? You say, oh, only 5,000. No, yes, only 5,000 today, only 5,000. Then you ask her, um, why is she saying only 5,000? Say yes, because this is the cash. In fact, she has received cash of 5,000. Somebody came to buy on credit. The person hasn't paid, so she's not counting it as part of the sales she has made for the day. You see, the Mokola woman is doing what we call what? Cash accounting. But in reality, if you are doing accrual accounting, you realize that her sales for the day includes both cash sales and what? Credit sales. So when you are reporting or preparing financial reports and you are only disclosing your cash sales, you don't add those credit sales, that information will be useless to who? Users, and it will not be able to support achievement of what? Financial reporting. You need to report on every aspect of the business. You don't include certain information and leave certain information out. All right. So what are the qualitative characteristics of information that are needed to be included in the general purpose financial report of a public sector entity? We are going to look at some of the qualitative characteristics of information to be included in the general purpose financial report. In fact, if you are doing FR, you agree with me that you are seeing this thing in FR. If you are not doing FR and you are yet to do FR, then congratulations, because when you get to FR, these things you are going to do them again. So the qualitative characteristics of information to be included in general purpose financial reporting are, I think they're about 6 or 7. Please know them. Know them. Relevance, faithful representation, understandability, timeliness, comparability, and verifiability. Okay, we will look at them in details. But please note, before you'll be able to produce a qualitative financial report or a useful financial report, sometimes there are certain constraints. When I say constraints are things that hinder your ability to provide something quality that you have been asked to produce. So you want to produce a qualitative or a useful financial information, but there are certain factors that hinder these things. These are what we call pervasive constraints on information included in general purpose financial report. So there are certain constraints. These constraints are what we call materiality. We look at them. Cost benefits, and then achieving an appropriate balance between qualitative characteristics. Yes. So look, in order to achieve these qualitative characteristics, these things here, there are certain pervasive constraints which will prevent us in achieving a qualitative financial report. And these things are what we call, there are 3 of them: materiality, cost benefits, and then achieving an appropriate balance between qualitative characteristics. So we are going to look at the qualitative characteristics first. Then next, we will look at the constraints that hinder us in achieving a qualitative characteristics financial report. Is that okay? All right. So all these things there, I mean, they are all okay. So let me take this. Each of the qualitative characteristics is integral to and works with the other characteristics to provide in general purpose financial report information useful for achieving the objectives of financial reporting. However, in practice, all qualitative characteristics may not be fully achieved. Yes, like I mentioned. So see, we want to achieve these characteristics, but because of these constraints, that's what they are saying that, however, however, in practice, all qualitative characteristics may not be what fully achieved, and a balance or a trade-off between certain of them may be necessary. Yes, in your bid to achieve these characteristics, these constraints are also there waiting for you. So sometimes you may end up not achieving all. Okay, now let's look at them. The first one is relevance. This one, it is simple English, but let's bring it in accounting term. That at what point do we say that a financial report or a general purpose financial report is relevant? Now, a financial or non-financial information is relevant if it is capable of making a difference. If it's capable of what? Making a difference in achieving the objective of financial reporting. So here, financial and non-financial information. So when is an information capable of making a difference? An information is capable of making a difference when it has confirmatory value, predictive value, or both. Please take note of certain things, some of these things. We are saying that one of the qualitative characteristics of financial report is that it must be relevant. And we are saying when is an financial information relevant? A financial information is relevant if it's capable of making a difference. Okay, at what point is information capable of making a difference? And information is capable of making a difference when it has two things: a confirmatory value and then a predictive value, or both. Okay, then the next step: when does an information has a confirmatory or predictive value? Then we come here. Financial and non-financial information has confirmatory value if it confirms or changes past or present expectation. Yes. So for example, you have prepared a financial report and you have told me that this company or this public sector entity, they have an asset of 5 million Ghana cedis. This asset, what shows that the asset is in the entity's name? What shows that they own it? What shows that it is an asset that they didn't go to rent? Sorry. What shows that it is somebody's asset and they have included in their value? So upon financial statement audit, an auditor will come and confirm all the figures in the financial statement and say that yes, truly, this asset belongs to Controller and Accountant General. Yes, if you go to Ghana Police Service, they have this asset as part of their pool of assets. They have this asset in their books. So financial and non-financial information has confirmatory value if it confirms or changes past or present what? Expectation. Yes. So for example, information will be relevant for accountability and decision-making purposes if it confirms expectation about such matters as the extent to which managers have discharged their responsibility for the efficient and effective use of what? Resources. Yes. You said you will be able to generate a tax revenue of 10 million. And this 10 million, you are supposed to use 8 million. Have you been able to achieve that? If you are able to confirm that, then that information has a confirmatory value, and therefore it is relevant for financial reporting and decision-making purposes. The achievement of specified service delivery objectives and compliance with relevant budgetary, legislative, and other place. In the public sector, everything is about what? Budget. So that's why I mentioned that you said you generate a revenue of 10 million. You said it is when you are doing a budget. And this budget, you said you will spend how much? 8 million. Were you able to do that? If yes, then fine. You have been able to confirm. And therefore, the information you are telling us is relevant to be included in your financial report. So look at this. Confirmatory and predictive rows of information are what? Interrelated. Please, in fact, in the exams, when they ask you that, mention and explain 5 qualitative characteristics of general purpose financial reports. And you are able to explain it short. If you check here, I have only highlighted certain things yellow. What I'm trying to say is that when you are learning, I'm not asking you to go and chew from all these places into your memory. So for only relevance alone, you can focus on the things I have what highlighted yellow and explain. In fact, as an examiner who mark some of the papers, I can tell you that sometimes you don't have to write plenty, everything. Me as an examiner, when I'm marking your script, I'll look for certain keywords. You see, at the exams marking center, sometimes the examiners, they are behind time because we are marking in where? Koforidua. It is a hotel. The institute has booked the hotel for, let's say, 1 week. So everybody must finish within the 1 week. There's nothing like overtime for the institute to bear additional hotel rent. So when I take your paper, in fact, I'm not reading everybody's script. I'm going to read, but I'm looking for certain keywords. Once I see it, I'll pass you. Because every discipline has its own literature, jargon, or technical terms. So when you explain relevance to me like this, and in fact, you are able to even tell me that confirmatory and predictive rows of information are what? Interrelated. And you don't even go ahead to tell me, for example, I'm okay. Okay. So for the purpose of lecture and understanding, let's continue. For example, information about the current level and structure of an entity's resources and claim to those resources help users to confirm the outcome of resource management strategies during the period and to predict an entity's ability to respond to changing circumstances and anticipated future service delivery needs. Please look at here. For example, information about current level and structure of an entity's resources. Okay, of an entity's resources. Here they mean the assets of a public sector entity. And then claims, they mean what? Liabilities. Yes, liabilities are the claims against an entity that they are bound to settle. So they are just talking about what? Entities, resource, and claims. Let me emphasize that the lecture notes I'm using is a book I'm writing, which is not yet, I haven't finished yet. So that's how can you see them in Word like this. So I'll be sharing them with you, and once it is done, it will be up for sale in public. But not now. By that time, you might have passed your PSA and then move on with your life. To those resources, help users to confirm the outcome of resource management. Yes, so you see, we are saying it is related because we can always match our assets against what? Our liabilities. And know what? Equity. Okay. Now let's look at the next qualitative characteristics of financial information, which is what we call faithful representation. Faithful representation. Now, every financial information must be a faithful representation of economic and other phenomena. Must be what? A faithful representation of economic and other phenomena that it purports to represent. So we are saying information has a faithful representation when it is able to provide a faithful representation of the economic and other phenomena that it purports to represent. Now, when we say economic and other phenomena, what are economic phenomena? Economic phenomena are things that has to do with the resource of the entity, the claims against it, its revenue, its expenses, its assets, its liabilities. Then other qualitative characteristics that do not have financial or monetary value. That's what we mean by what? Economic and other phenomena. That it purport, or I want to explain the meaning purport to you. That is seek to represent. That is seeks. Okay. Faithful representation is attained when the depiction of the phenomenon is complete, neutral, and free. So please, you see, when we were doing relevance, we look at the element of relevance, capable of making a difference. Then under capable of making a difference, we look at confirmatory and predictive value. The confirmatory and predictive value, we also look at what? If it confirms to changes, if it confirms or changes past or what? Present expectation. The same way when we look at faithful representation, its sub-elements are what? Must be a faithful representation of economic and other phenomena that it purports to represent. Then under it, faithful representation is obtained when the depiction of the phenomenon is what? Complete, neutral, and free from material error. Using the Mokola woman as an example, when he tells you that the sales he has made for the day is only 5,000. She didn't include credit sales she has made to people, then that information is not what? Complete. And so that information is also not neutral. Yes. Then when an information is full of error, then that information doesn't have the characteristics of what? Faithful. In fact, you have prepared a financial report and it's full of mistakes. Instead of adding figures, you end up adding the figures and making mistakes. Instead of 896, you do 698. Error of transposition of figures and a whole lot. The figures are full of casting errors. Then we are not going to rely on your information. Okay. Information that faithfully represent an economic or other phenomenon depict the substance of underlying transaction, other events, activity, or circumstances, which is not necessarily always the same as its legal form. So sometimes you have what we call substance over what? Form. You might have gone to rent somebody property, okay, to be doing your business. How you include that property in your books might be different from the legal aspect of it. I mean, the agreement you entered into and all that. Okay, so I mentioned somewhere here, complete, neutral, and free from error. They are saying that in practice, it may not be possible to know or confirm whether information presented in financial report is complete, neutral, and free from material error. However, the information should be as complete, neutral, and free from error as what? Possible. Sorry. Yes, we know that as you are preparing the financial report, there could be errors, but these errors should not be so much material error that it will affect users of financial information in making decision. I mean, it could be minor errors that can be overlooked, but not major ones that will put the integrity of the report you have prepared in disrepute. Is that right? An omission of some information can cause representation of an economic or other phenomenon to be false or misleading. So the Mokola woman who made a sales of 5,000, and some people have come to buy on credit 1,000 or 2,000. She didn't include it on it. That is an omission of what? Some information in her sales figure. Okay, let's look at neutrality. Neutrality in financial reporting is the absence of what? Bias. You have prepared the financial statement to suit you because you are going for a loan from the bank. You want the bank to know that your company has a lot of assets so that the bank will say, oh, he has assets, we can use it as collateral. And so you've included assets that do not belong to you or even assets that do not exist. You are being what? Biased. Okay. So that is neutrality. Then free from material errors does not mean complete accuracy in all respects. Yes. When auditors come to do audit, they tell you that they've come to express a reasonable opinion on the financial statement, not an absolute opinion, but what? Reasonable. So free from material error means there are no errors or omissions that are individually or collectively material in the description. And when we say material means that it can affect decision making. Yeah, we are saying it is material. For example, you go to order somebody who is a petty cashier. In fact, the person handles like 20,000 petty cash in a month. And when you went, there was a shortfall of just 10 cedis. I mean, 10 cedis you can overlook, isn't it? That is not true material. He made a shortage of 10 cedis and 20 cedis. You can't say that he or she has stolen money and while the petty cash not balanced, and there's a difference of what? 10 cedis. No. But somebody handling a petty cash of 20,000 a month, and you go and there's a shortage of 1,000 cedis, 1,500, 2,000. That is material, and you have to investigate. Okay, let's look at understandability. Yes, when you produce general purpose financial report for users, in fact, they are going to make decision out of it, and therefore they should be able to understand. When you're an accountant in Ghana and you prepare financial reports here, an accountant in the UK should be able to understand why you prepare, because we are all using the same word, IPSAS. I mentioned standardization and then globalization. So when you're an accountant in Ghana, whatever you are doing, somebody in the UK will also what? Understand. Okay. Understandability is the quality of information that enables users to comprehend its meaning. Yes. You can't prepare financial reports to people and they don't understand what you are preparing. So general purpose financial report should present information in a manner that responds to the needs and knowledge base of what? Users. And to the nature of the information presented. So for example, explanation of financial and non-financial information are commentary on service delivery and other achievements during the reporting period, and expectation for future period should be written in plain language and presented in a manner that is readily understandable by what? Users. Sometimes when you prepare the information, you do something what we call notes to the account, so that it will explain certain things that users may find what? Difficult to read. Understandability. The next qualitative characteristic is timeliness. Yes, in fact, public sector entities or entities are supposed to report on an annual basis or a 12-month period. So for example, in Ghana, all companies must file their returns with the Ghana Revenue Authority by 30th April. If you don't do this on time, it attracts some penalties or interest or whatever. In the same way, when people need information, the information must be provided within a time frame. So the information is prepared for a 12-month period, and you are being asked that by the end of the first quarter of the following year, you have to present your report. If you don't present your report, the information will lose its usefulness because the time you are supposed to present it has elapsed. You didn't. So timeliness is very key. When you don't present it and you delay, people will begin to doubt the integrity of your report. So timeliness means that having information available for users before it loses what? Its capacity to be what? Useful for accountability and decision-making purposes. This one is as straight as that, and I'm going to move ahead. let's look at comparability. Yes, when you provide information, for example, I asked you for information for last month, okay? In fact, when you give me the information for last month, uh, 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 you could as well also give me information for last 2 months so that I'll be able to compare the changes between last 2 months and last month, or even this month, and then investigate the reason for the change. That one we mean by what? Comparability. So in the public sector space, we usually compare, comparability has to do with, we are comparing actuals with what? Budgeted. Or sometimes we want to compare this year and then last year, or we are comparing last year and then 2023. That is comparability. When you prepare the information this way, it helps users to understand and compare the information and make meaning. Why has revenue changed from last year to last 2 years? What changed? What happened? Why is the expenses so high? What is the reason? That's what we want, comparability. So comparability is the quality of information that enables users to identify similarities and differences between two sets of what? Phenomena. It is as simple as that. Comparability is not a quality of an individual item of information, but rather a quality of relationship between two or more items of what? Information. Yes, you want to compare. So when I ask you information, you don't just prepare only last year. In the public sector, it is usually a comparison between actual and budgeted. We will look at it when we are doing more, when we are looking at budgeting also. Please, I hope you can see my screen and you are following. Let me hear from you.
Yes, please.
Yes,
Okay.
please, we can see.
Okay. So we are saying that comparability differs from what? Consistency. When we say consistent, consistency is doing what you have been doing year after year. I mean, using a particular policy without changing. Okay, please, by the way of introduction, I think I forgot. How many of you have done accounting before? Have you all done accounting in first degree, HND, MBA, or somewhere before, please? Hello?
Please, I'm still doing my first degree and I'm doing accounting.
Okay, so Yabua, you said yes, you done account. Okay, who else? I want to know so that I'll be able to determine the pace. In some previous classes, some of the students I realized do not have accounting background, so I had to slow my pace. Okay, Cherry, have you done accounting before?
Yes, please.
Mohammed, how about you? Hello, Mohammed. Are you there? Okay. Let's continue. So let's look at comparability. We're saying that it is different from consistency. When we say consistency, we are looking at the use of an accounting principle or policy and a basis of preparation, either from period to period, within a period, or in a single period across more than one single more than one entity. That is consistency. So if you have chosen to use straight line method, sorry, FIFO method or whatever, it means every year you do the same thing. You don't do straight line this year, next year you change to reducing balance. No. That is what we mean by consistency, reducing the same. But comparability is the goal, and consistency helps in achieving that goal. So that's the difference between comparability and then consistency. Okay, let's look at verifiability as a qualitative characteristics of financial information. So verifiability has to do with the quality of information that helps assure users that the information in general purpose financial report, the information in general purpose financial report represents the economic and other phenomena that it purports to represent. Yes, you have saying to us that the economic phenomenon that you are presenting to us in the way of asset, liabilities, expenses, revenue. Okay, how true is it? It is only true when we have been able to what? Verify that yes, whatever you are telling us is true. So we are saying that supportability is sometimes used to describe this quality when applied in the aspect of what? Explanatory information and prospective financial and non-financial information disclosed in general purpose financial report. That is the quality of information that helps assure you said that explanatory or prospective financial information or non-financial qualitative information faithfully represent economic and other phenomena that it purports to represent. Okay, so that is verifiability. When you can prove to us that the economic phenomenon, like I mentioned, anytime you hear economic phenomenon, think of the company's resources, the claims against it, its revenue, its assets. What you are telling us, the revenue you are saying you have made, the expenses, the asset you are saying you have, the liability you said they are against that asset, and then your equity. These are what we mean by what economic and other what phenomenon. And once we can verify and confirm its existence and its accuracy, then that information is verifiable. And when it is verifiable, the information has a qualitative characteristics. Okay, so before we will achieve this, we say that sometimes there are constraints. Please, this thing they like asking the exam. So constraint on information included in general purpose. I mentioned earlier, materiality. Materiality. So listen, information is material if its omission or misstatement could influence the discharge of accountability by the entity or the decision that users make on the use of the entity's general purpose financial report prepared for the reporting period. Please, in exams, when you are writing on materiality and you wrote up to where I have highlighted, you should be fine. Information is material if its omission or misstatement could influence the discharge of accountability by the entity or the decision that users make on the basis of the entity's general purpose financial report prepared for that reporting period. So let's use the Mokla woman again. Cash says 5,000, credit says 2,000, but she didn't include it. So that is what omission or a misstatement. And if you want to know the Mokla woman's true sales and make a decision, her omission of the 2,000 can influence the discharge of what accountability. It's the same way as a public sector entity. That if you have omitted an asset value in your books, it can affect the decision that, for example, they are saying that Odododio constituency or La Dokotopon or Lezokuku Kurowo, this year, before we will give you budget allocation from the consolidation fund, you should be able to generate IGF of 10 million. Then, when the year ends, this 10 million, you realize that about 2 million is missing in the account. That is material and will affect decision making and even performance. So that's what materiality. So sometimes in trying to achieve the qualitative characteristics of financial information, we are limited by what? Materiality. Now we are saying materiality depends on both the nature and the amount. See, materiality depends on what? Nature and amount of an item. So the amount, 2,000, the petty cash I said, 10 cedis. I mean, it's not anything, isn't it? But 1,000 cedis, 2,000, we have to investigate. So that is materiality. And then the nature has to do with, let's say, assets. If you are going to audit a capital intensive company, let's say a mining company that use heavy equipment, some of the items of materiality you have to focus on is on their what? Assets. But if we are going to audit a company like Western Small or ShopRite, or I mean whatever, you realize that here you have to focus on what? Their cash collection, their cash sales every day. Pay attention to the cash process. The tellers, how are they? I mean, look at weakness in the cash collection process. So here, cash will become material. But a mining company, cash will not be what? A material nature or item to consider, because a mining company, they don't deal in cash transaction that much, isn't it? Transfers, bank transfers, and all that. Okay. So that is materiality. And sometimes some of these things hinder achieving qualitative characteristics of financial focus. Then we have cost. In fact, if you want to achieve a qualitative characteristic information, or you want to get a quality information, it comes with what? Cost. It's not easy. We have to look at the cost in implementing or in producing the financial report, and then the benefit. Now, companies use accounting software, isn't it? In the public sector, they use what we call GIFMIX. We will look at GIFMIX later or soon. GIFMIX means Ghana Integrated Financial Management Information System. It is like it's like a software used in the public sector. We look at it. It's a very long topic. We'll look at it later. So let's look at cost benefit. We say that financial reporting imposes cost. Yes, it's not easy. If you are saying you use Excel, you make a lot of mistakes. So if you want to go for a software, look to prepare your financial report for you. We are going to look at the cost of the software, and the benefit will even derive after you prepare the financial report. So that's what we mean by cost and benefits. The benefits of financial reporting should justify those costs. So you are going to generate a report for a loan from the bank. You want to have accurate report. In fact, the loan you are going to get from the bank is 10 million. But the software you need to be preparing your report every year costs you about 100 million. So you see, it is going to put a constraint on you getting a quality financial report. That's what we mean by cost benefit. Okay, let's continue. Let's reading. Then, so we are going to, how do we balance between the qualitative characteristics? How do we balance it? How do we balance it? So the qualitative characteristics work together to contribute to the usefulness of information. For example, neither a depiction that faithfully represents an irrelevant phenomenon, nor a depiction that unfaithfully represents a relevant phenomenon result in useful information. It is very simple. Let me explain again. Neither a depiction that faithfully represents an irrelevant phenomena, nor a depiction that unfaithfully represents a relevant phenomena results in a useful information. Similarly, to be relevant, information must be timely and what? Understandable. So we are looking at balance between qualitative characteristics. Okay, in some cases, a balance or trade-off between qualitative characteristics may be necessary to achieve the objectives of financial reporting. The relative importance of qualitative characteristics in each situation is a matter of what? Professional judgment. Let me take that again. A balance or a trade-off between qualitative characteristics may be necessary to achieve the objectives of financial reporting. So sometimes, because of maybe certain issues or constraints, you might want to focus on some qualitative characteristics more than what others. But your decision to do that is a matter of professional judgment. The aim is to achieve an appropriate balance among the characteristics in order to meet the objectives of the report. Okay, please, any question? We are going to look at key characteristics of a report entity. Please, those of you who have looked through the past, this is a past question. You were asked to give the characteristics of a reporting entity. So a reporting entity can be a ministry, a department or agency. It can be a metropolitan, municipal, or a district assembly. It can be Parliament of Ghana, the Supreme Court, Ghana Police. That's a reporting entity. It's all right. And this was a PASCO before. So let's look at a public sector reporting entity. Is a government. In fact, they can even ask you what is a reporting entity. And I think they asked before, what is a reporting entity? Okay. So a public sector reporting entity is a government or other public sector organization, program, or identifiable area of activity, hereafter referred to as a public sector entity, that prepares what? General purpose financial report. Please. They can ask you this one for 3 marks. If you write this 2 and quarter lines, it's not even, let me even take it 2 lines. If you write this 2 lines for me, you qualify for the full 3 marks. That when you ask, what is a reporting entity? A public sector reporting entity is a government or other public sector organization, program, or identifiable area of activity that prepares what? General purpose financial report. A public sector reporting entity may comprise 2 or more separate entities that present general purpose financial report as if they are a single entity. So please, when you see here, it's a public sector entity, a program. Don't forget, in the public sector entity enterprise, we do what we call program-based budgeting. So what are some of government flagship programs? Free SHS, one district, one factory. So this is what we call what? Programs. Then the entity is there. So we can have the entity as a body. Then we can have government flagship program too as an entity. Don't forget, that's why we have what we call programs also here. Okay. Such reporting entity is referred to as what? A group reporting entity. Please look at it. It's a PASCO. They ask the characteristics of a reporting entity. Let's look at key characteristics of a reporting entity. A reporting entity is an entity that raises resources on or behalf of what? Constituent and or what? Uses resources to undertake activities for the benefit of or on behalf of those constituents. Yes. Every reporting entity raises resources from, we the individuals, or on behalf. Yes. In fact, parliamentarians and anybody who is doing a government work is doing that on our behalf with the taxpayers. And or uses resources. So they raise the resources from where? Taxes. Then they use the resources by what? Spending. To undertake what? Activities for the benefit of or on behalf of the constituent. We are the constituent. That's why we have the word called constituency. 270 something constituencies. Yes. Now, a reporting entities, there are service recipients or resource providers. Yes. We, the individuals, are the resource providers. At the same time, we are service what? Recipients. We provide them the resources by way of paying what? Taxes. And we receive the service from them from their execution of their mandate we have given them to be in the office. Is that okay? So we are resource providers. IMF can be a resource provider. German government who could give a loan could be a resource provider. Okay. There are service recipients or resource providers dependent on general purpose financial report of the entity for information, for accountability, and what? Decision-making purposes. A government may establish and or operate through administrative units, such as a ministry or what? Department. Yes. It may also operate through trust, social security and national insurance what? Trust. Statutory authorities. You know all the statutory authorities. Bank of Ghana is a statutory body. Government corporations. You know government, state-owned enterprises and other entities with separate legal identity. Yes. I mean, Bank of Ghana, when you hear all those authorities, Ghana Revenue Authorities, Driver and Vehicle Licensing Authority, Ghana Ports and Harbors Authority, all those authorities, these are all what reporting entities. The factors that are likely to signal the existence of users of general purpose financial report of public sector entity or a group of entities include an entity having responsibility or capacity to raise or deploy what resources. Okay, so please pay attention and take note that you could be asked what a reporting entity is and the characteristics of what a reporting entity. Okay. Elements of public sector financial statement. Yes. And please, I've been doing the talking. This one, the ones you've done accounting somewhere before. What are the elements? I even mentioned it in the lecture before. Elements of public sector financial statement. All these things they do normally ask. Normally, I think question one. Yeah, question one. So, what are the elements of public sector financial statement? When we say elements of public sector financial statement, if you take a financial statement, what are the things you see on the face of the financial statement? Yes, who can give me one? Cherry, can you give me one? An element of a financial statement.
Expenses.
Thank you. Yabua, give me one.
Liabilities.
Liabilities. Thank you. Cherry, it's okay for now. Yabua, give me one.
Revenue.
Revenue. Thank you. Mohammed. Mohammed, unmute yourself. Mohammed left the meeting. Okay, let's continue. Okay, so we are going to look at the elements of public sector financial statement, just like you mentioned. Yes, that is that. And these are things you are supposed to know. You see, sometimes the PSA, you know what, some people try to dodge the ICA, but PSA is the only course that even if you have an MBA in finance, ICA will never give you an exemption. I don't know whether you are aware. If you have an MBA in finance, you could be exempted all the papers in part two, but after PSA, you will write. So these are the elements that are identified in the financial statement. I mean, asset, liability, revenue, expenses, owner's contribution, and there's owner's distribution. Okay, so assets. At this juncture, ICA, nobody will ask you what an asset is, but you are supposed to know that an asset is a resource presently owned by the entity as a result of what past event. What is the past event we are talking about? This past event means that some time ago you entered into a transaction to purchase what the assets. You made an inquiry, you were given an invoice, and you paid for it, and you acquired it, and it became your own. This is an event that happened, a transaction you did, and it is a resource that you owe, a resource presently controlled by the entity. Yes, if you say you have an asset, but you don't have authority over the asset to use it, it is not yours. Now, when we say resources, a resource is any item with what service potential or any item that you use or has the ability to generate economic what benefit. That is a resources. So if you are a baking company and you have a delivery van and you are not able to use the delivery van to distribute your bread or your bakery, it is not a resource because that didn't what generate economic benefit. So some resources embodied an entity's right to a variety of benefits, including, for example, use of resources to provide services, use an external party's resources to provide services, for example, leases. Yes, sometimes you can have a resource or an asset by way of leasing, convert the resources into a cash through a disposal, then you can benefit from the resources. So all these are, sorry, what we mean by assets. So we say an asset presently controlled by the entity. I explain control of resources entail the ability to use the resources towards what? Achieve economic benefit of service potential or economic benefit embodied in the resources. Okay, how do we assess whether an entity presently control a resources? So legal ownership. Yes, if it's a vehicle, DVL from C. From C, is it your name that is on the vehicle? If it is a land, we are looking at indenture, light, sand plan, title deeds, and what shows that the land is yours. Access to the resources or ability to deny the resource others to use the resources. All this shows that you presently want to control the resources. Then past events. The definition of an asset required a resource that an entity presently control must have arisen from a past what? Transaction. I've explained that already. Or other past events. The past transaction or event that results in an entity gaining control of the resources, and therefore an entity may differ. Therefore, an asset may differ. So that's the meaning of past event. So these are some of the explanations in the definition of an asset that you should know. You see, for this course, knowing the definition of an asset liability is very important. You know the reason? Sometimes students, when you are marking and you are being asked to prepare a revenue and expenditure account, then you go and see students including item of asset and liability in revenue and expenditure. No. It means that the examiner will find out you don't know what you are doing, that assets and liabilities are not supposed to be treated in revenue and expenditure, but rather they should be treated in the statement of financial position. So that's why this is very important. Then liabilities. We are saying liabilities are outflow of what? Economic resources from past events. Yes, when we say economic resource, outflow of economic resources, it means it's a present obligation. You owe, you're going for a loan. You haven't paid. So currently or presently, you have an obligation from past transaction. From the time you went for the loan, you sign loan agreement and they give you the loan. That arises from past transactions. So that is that for liabilities. That's for liabilities. So the past event is then revenue and expense. Here too is worth noting, because when we begin doing the calculation, preparing revenue and expenditure of an MDA or MMDAs or even a school, a hospital, some students find it difficult. Sometimes items of revenue and expenses, then they are missing up. So it is worth noting revenue and expenses. Then surplus or deficit, yes, from the difference between a revenue and expense, we get a surplus or a deficit for the period. Yes, let me focus on this one. Owner's contribution and ownership distribution. Ownership distribution are inflows of resources to the entity contributed by external parties in their capacity as what? Owners. So here we are looking at additional capital injection by way of what? Additional shares, the owners introducing money into the business. Is that okay? Capital injection, which establish or increase an interest in the net financial position of the entity. Then we have owners distribution are outflows of resources from the entity distributed to external parties in that capacity as what? Owners, which in turn will do. So here we are looking at dividend payment. Don't forget, shares can be preference shares, ordinary shares. Is that okay? People have shares in government entities, isn't it? People have bought shares in GCB and other public sector institutions. So owner distribution has to do with dividend payment. Then here we are saying that it is important to distinguish inflow of resources from owners, including those inflows that initially establish the ownership interest, and outflow of resources to owners in their capacity as well as owners from revenue and expenses. So let's take note of that. Then we are also saying that ownership contribution may take the form of initial injection of what resources. Okay, so that is that when you get the notes, pay attention to all this. Yes, here too is very, very important. Recognition of the elements of financial statement of public sector entities. Yes, here too is very, very important. Recognition of the elements of financial statement of public sector entities. When we say recognition, what we mean, recognition is the process of including or incorporating the figures in a financial statement. So at what point can you tell us that you have made a sale of this amount? At what point can you tell us that you have to include this asset value in your account? At what point can you include a liability in your books that this liability you have an obligation to pay? This asset, it is for you, you own and control it. So those elements we have looked at just a while ago. We are going to look at the point which we can include them in our books, that they are our assets, they are liabilities against our assets. These things are revenues we generated, and these things are expenses we made in generating the revenue. So recognition criteria and their relationship to disclosure. All right, so look at here. Recognition is a process of incorporating or including in amount displayed on the face of the appropriate financial statement an item that meets the definition of an element and can be measured in a way that achieves qualitative characteristics and takes account of the constraint on the information included in general purpose financial report. So when we say recognition, like I explained, at what point can you incorporate or include the amount that you have displayed or shown on the face of a particular financial statement, an item that meets the definition of an element? We've looked at the elements of financial statement. So when I say of an element, I tempted to believe you already understand. Now, what are the recognition criteria? The recognition criteria are that an item satisfies the definition of an element. Yes. So in the first place, before you can include something, or you can recognize an element on the face of a financial statement, then that item must even justify the definition of what? An element, which means an asset, liability, equity, expense, revenue, before you can even include it. Two, can be measured in a way that achieves qualitative characteristics and takes account of what? Constraint. Yes. For example, in financial statement, we are looking at those items that can be measured reliably in financial or monetary value. If you are in the office and I come to discuss with you about an upcoming wedding I'll be going next week, this discussion is not a monetary or economic value that we can include in the financial statement, isn't it? Yes. For example, you can't include the experience or the qualification of your staff in your financial statement. Which value are you assigning? That this staff, his experience and qualification is 10,000. So let me include it in the books, in my books. Oh, I have 10,000 books. Those things are what we call they are way of goodwill, which sometimes are what? Arbitrary, isn't it? And capricious. Okay, so all items that satisfy the recognition criteria are recognized in the financial statement. Recognition involves an assessment of what? Uncertainty related to the existence and measurement of the elements. The condition that give rise to uncertainty, if any, can change. Therefore, it is important that uncertainty is assessed at each stage of the what? Reporting entity. So like I mentioned, you can't include the knowledge, the expertise, the qualification of your workers in your balance sheet because anybody can leave you, can resign at any time. So we are saying that the condition that give right to we are saying that recognition involves assessment of uncertainty related to the existence and measurement of the element. Yes, here measurement is key. Very soon, we will look at how to measure an item of asset, liability, how to measure them and include them of our book. So what is an element? Definition of an element. Okay. An element of an item must meet the definition of one of the elements of public sector financial statements already discussed above. Uncertainty about the existence of an element is addressed by considering the available evidence in order to make a neutral judgment about whether an item satisfies all essential characteristic definition of that element. How do you then measure uncertainty? In order to recognize an item in the financial statement, it is necessary to attach a monetary value. Good, I've said it already. To attach what? A monetary value to the item. This entails choosing an appropriate measurement basis and determine whether the measurement of the item achieve qualitative characteristics. Yes. Okay, so that's how to measure an element. All right. There may be uncertainty associated with that measurement of many amounts presented in the financial statement. The use of estimates is an essential part of what? Accrual basis of accounting. Yes. In accounting, what we call accounting estimate. Accounting estimate, errors and all those things. Okay. So before including an element, the issue about uncertainty, assigning monetary value, all come into play. All right. Now look at this place. Disclosure can provide useful information on estimation techniques employed. There may be rare instances in which the level of uncertainty in a single point estimate is so large that the relevance and faithful representation of the measure is questionable, even if disclosure are provided to explain estimation techniques. Now, in accounting, sometimes you can't give exact values to an item, and so you are given a room to give an estimate. Is all right. So that is what this place is said, that there may be rare instances in which the level of uncertainty in a single point estimate is so large that the relevance and faithful representation of the measure is questionable. Because estimates are sometimes based on subjective valuation and others. Sometimes our estimation could be so large that, in fact, whatever we have given will be what? Questionable, even if we have disclosed that, oh, this one, I use my personal judgment in giving an estimate. Now, let's look at disclosure and recognition. Please, in accounting, and those of you doing FR, all the IFRS, the IAS, and then the IPSAS, they are about, I think, 4 things. Let me mention them, and I don't know whether you are writing. For you to be good at the standard, if it is an IFRS or IAS or IPSAS, it's about you knowing, one, the measurement criteria of that standard. Let's say IAS 16, IPSAS 12, IPSAS 2, or whatever, IPSAS 21, 24. The examiner will test you that, do you know the measurement criteria of that particular standard? 2, what is the recognition criteria? What is the disclosure criteria? And what is the de-recognition criteria? So these are the 4 things. If you know these 4 things about all the standards, you should be good to go. And you don't have a problem. I said it's about what? The measurement criteria, recognition criteria, disclosure, and de-recognition. So let's look at what do we mean by disclosure and recognition. I have explained recognition already. That recognition is a process of incorporating in the financial statement the values or the amount. Then disclosure is whereby certain things that are not on the face of financial statement, You tell us about it. That is what disclose. You are disclosing. Now, the opposite of recognition is derecognition. At what point are you taking that particular item from your books? That is derecognition. Okay, so I think we started exactly 2 hours ago, and the class is a 2-hour class. We started around, I think, 7:40 something, and it's almost time. So I'll end here on disclosure and recognition, then derecognition. Derecognition is the process of evaluating whether changes have occurred since the previous reporting date. That warrant removing an element that had been previously recognized from the financial statement. So, for example, for an asset, at what point did you recognize in the asset that this asset is yours, and so you are including it in your books? When you have finally used the asset and depreciated it, and you have sold it, you have to retire the asset from your books and take it from your books. That is derecognition. Next week, we will look at measurement of assets and liabilities in financial statements. This will take us to a long way. Then we look at measurement basis and their selection. We look at a whole lot up to measurement basis for assets. So the first one is measurement basis for assets, and then liabilities. We look at everything. Then we'll make a stop at sample solve past questions on conceptual framework. So that's how the class is going to be. All right. Please, we've ended the class. Do you have any question? We'll continue. It's a 2-hour class. If you have any question for me, you may ask. Other than that, in the absence of any other question, until then, see you next week. Any question for me? Any question for me, please?
Sir, please, will you send us the recorded?
Say again.
I said the recorded. This will you send it to us?
Yes. I'll upload the recording on YouTube, and I'll also share the slides, the lecture slides with you. Is that okay for you?
Okay. Yes, please. That's okay.
All right. See you next week. Bye-bye.
Okay. Thank you.
Thank you, sir.